Today we see healthcare and energy stocks starting to rally as big tech takes a day to cool down. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright. Today SPY was up 0.38% and we're on the second day in a row outside the upper Bollinger Band, and we're still seeing a lot of shorts getting squeezed out of this market. As you can tell from the volume, this is all happening on very low volume. So once we complete this short squeeze, we are likely going to be due for a pullback because we're not really seeing that high volume buying to sustain this rally. Now, one thing I want you to pay attention to is that SPY did close at some very critical resistance at 411, and if we gap over 411 with tomorrow's price action, not only will we be extremely outside the upper Bollinger Band on the daily chart, but we're also likely going to see a short squeeze to this critical resistance at 414. So going into tomorrow, 411 is a very critical resistance level, and if we gap above it, look for another short squeeze. That'll likely lead to a pullback after the squeeze is over. So we have critical resistance at 411 and 414. And if we start to get rejected from this overextended condition, we're looking for a retest of the breakout right here, right around 407. Below 407, we have a gap to fill at 404, and below that, we have a gap to fill at 401.6. So there is plenty of room to the downside, especially on a sharp reversal from critical resistance. So if you are still bullish outside the upper Bollinger Band on the daily chart, you are taking on a lot of unnecessary risk. So do manage your risk and always consider taking profit as we hit critical resistance levels. On the Nasdaq 100 triple Qs, we were down 0.24% today as we did see big tech cooling down a little bit, but we are still in this very powerful bull trend and still above a rising 5 EMA. The next likely target for the triple Qs is going to be this gap fill at 322, and then above that we could push to the double bottom price target at 327. However, there is still a good chance we need to come down here and fill this gap right around 313 and possibly test the breakout right around 312. So with big tech cooling down, it's possible we do see a little bit of a pullback to retest this breakout. However, there are a lot of bears trying to call a top shorting this market, which means the short squeeze is still possible. So do not expect more downside unless we can break down below the 5 EMA, and then I would start looking for a retest of that breakout and the gap fill. Remember, it takes a lot of sellers to push the market lower, so if the short sellers continue to show up and buyers continue to squeeze them, it is possible we go straight up without that pullback. However, I do think it is a slim chance, and I do think there is more probability we get the pullback sooner rather than later. On the Dow Jones, we were up 0.99%, and the Dow Jones also gapped up outside the upper Bollinger Band and closed way outside the upper Bollinger Band, so we are extremely overextended in the Dow. This is that bull breakout above the daily high at 335, so this is bullish, but from here, from the higher high, we will be looking for a pullback to a higher low. The higher low is likely going to take us down to fill this gap around 332 to 333, or at least retest the breakout of the daily high at 335. If we break down below 332, we have another gap to fill down here right around 329, and the next upside resistance could push us all the way up into the 340s. Also pay attention, the Dow Jones is going up on increasing volume because we did see a lot of strength in the healthcare and the energy sector today. On the Russell 2000 IWM ETF, we were up 0.04% today, and we did bounce off of that critical retest of the daily high breakout above 177. That is exactly where the buyers stepped in at support today. We're above the rising 5 EMA, and the 20 simple moving average is still negatively sloping, so we need to see the bulls continuing to push to get these moving averages to curl back up to support the buyers, and we need to go break out above the gap fill at 181. Any rejection from resistance could easily take us back down to about 176, and if we break down below 176, we'll be looking for the gap fill at 172. On the ARKK ETF, we were down 1.88% today, and ARKK is trying to fight off this triple top rejection from the critical resistance at 40.5. Above 40.5, we have a higher high breakout after a higher low off of 37. So it's going to be a very impulsive bullish breakout and a short squeeze if we see price action breaking above 40.5, and that could send us very quickly to 43. However, with the triple top rejection, it's also possible we go lower, and right now this is going to be a double top once we break down below this neckline at 37, and it's going to look like a triple top rejection if we break the neckline at 36, and all of these price targets would easily take us down to fill the gap at 32. On the VIX, we were down 0.8% today, and the VIX continues to crush every time it approaches that resistance right around 20, which is more indicative of a bull trend as fear is leaving the market. I've said this many times, but 2023 has very different behavior in the VIX because we've spent a lot of time with VIX down below 20, which is more in line with what you see in a bull trend, and that is exactly why we're seeing such a strong market. On Bitcoin, we're currently down about 1.36%, and Bitcoin is in jeopardy of getting this double top look off of 28,000 if we lose support at 27,000, and then I'll be looking for a retest of the breakout at 25,000. Above 28,000, we can still reach that price target at 29,400, but I think time is running out for the bulls and they need to push soon, otherwise we are likely going to go lower and retest that breakout. On Google stock, we're up 0.61% today, and Google is looking incredibly bullish, and I've said it before that I think it's a great buy between 98 and 100 because I still think we're going up to close that gap at 110, and today was a very bullish candle off of the support zone right around 102. From here, we need to break resistance at 106, and then it should be a quick trip to 110 and possibly even push to the top of that channel closer to 115. Critical downside support remains 100 and the 20 daily moving average, so as long as we're above that, you can buy the dip in Google stock. On Amazon stock, we were down 0.85% today, and Amazon did hold the support breakout at 102, but we did close with a doji candle, and we're not really getting that bullish price action that we need to see. If we break down below 102, look for the gap fill at 100 and critical support at 98, and we still do have a full bull trend, so it is still possible we don't fill that gap and we get the impulsive bounce off of 102 and go straight towards that target at 109. On Microsoft stock, we were down 0.37% today, holding that breakout above the gap fill at 285 and still holding above a very impulsive bull trend above a rising 5 EMA, which means we could be trying to go to that price target at 290 and the gap fill at 296. However, any rejection from 290 means we could still come down and get the gap fills below at 281 and 276. This is a powerful bull trend, so it's possible we go higher before we go any lower, so watch that critical resistance at 290. On Nvidia stock, we were up 0.68% today, and we had another bounce off of the rising 5 EMA and the breakout zone of that resistance at 274, which is now support. That means we could go to the next price target higher at 282.5, and then we will likely be due for a pullback, which could take us back down towards our support trend line and our rising 20 daily moving average. So I know it's tempting to short this stock, but if you're shorting Nvidia, you are shorting a very powerful bull trend, and that is usually going to be a recipe for disaster. On Tesla stock, we were down 6.12% today, as Friday we were just way too far outside that upper Bollinger Band, slamming into resistance right below 208, and we had that sharp rejection from resistance, and we're right back inside the Bollinger Band, sitting on top of support right around 193. Below 193, we have support right around 187 and then 183, and we need the bull breakout above 208 to get to our next price targets at 215 and then 230. If we continue lower and lose support, we still have this gap way down here at 146, which is obviously a much lower price target, so you need to make sure you're managing risk very tightly if we continue to break through support levels. On Apple stock, we were up 0.77% today, and today we did hit the inverse head and shoulders price target, which was this level of the breakout right around 166, but I do think we're going to have some very critical resistance here. If we don't see resistance, that means we're likely going straight to the top of the channel at 169 and then the gap close at 171. But I think more than likely we'll find some resistance right around 166 and at least get a retest of the breakout right around 163 to 164. Below that support, we close the gap at 161, and then below that gap, we fill the gap at 158.5. On the financial sector, we were up 0.19% today as the financials are trying to turn this corner and get a double bottom look right off of 31 with the neckline breakout of 32, which could take us up to 33. So manage your risk right here at the breakout at 32. Below that, we fill the gap at 31.5. On the industrials, we're up 0.18% today with the second day in a row closing back over resistance at 100. So we are looking like we're going to start developing a bull trend the longer we can hold above the rising 5 EMA and the 50 EMA. On the healthcare sector, we were up 1.12% today with a very bullish candle, breaking that resistance at 130, which was the bear market resistance level that we needed to break back above. So now we're getting more bullish in the healthcare sector the longer it can stay above 130. The energy sector was up 4.53% today, continuing with that double bottom look, and we're well above the double bottom price target with this giant gap up open, and we're right at the upper Bollinger Band. We have a huge gap to fill to the downside, but it's possible that gap does remain open and we continue to push higher towards resistance at 87 to 88. So jumping back over to the S&P 500, we are at very critical resistance and we're seeing some strength in the healthcare and energy sector, but mostly we need to see the financials and the big tech sector to continue to show strength to see SPY pushing higher. So manage your risk right here at critical resistance at 411, because if we do get rejected from here, we could see some sharp selling down to backfill some of the gaps below. So have great risk management, manage your risk accordingly, and if you're shorting this market, remember you are shorting a very heavily shorted market that is currently in a bull trend, which is usually going to be a recipe for more short squeezing. So I know it's tempting to short things you think are going too far, too high, and too fast, but sometimes you need to just let the other short sellers get squeezed and then step in when they all capitulate, and then you can get a much easier short trade. If you want to trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. You'll find out how to join the Discord server by clicking on the link below. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join Bank by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.